Okay. I'm going to just start talking. I'm sure it'll be slow for people to come on. I know my audience is a lot smaller than it used to be. I hope all is well. I hope everybody's had a good Sunday. I'm coming on Sunday night because we can expect that the sellers of stock that does not exist, is not borrowed, is not located, will continue to do so as long as Railtown's on a restricted list. And the company can't talk about good things or bad things. Buyers that know what's going on, that have money, can't buy. So they're going to continue to try to scare you out, shake you out. And so that's why I come on. I thought today we could try to come up with some reasonable guesstimates of revenue possibilities and multiples. And I hope by the time we just go through a bunch of examples, you can actually see that Railtown is worth more than where it's trading right now, and probably significantly more. There's a concept called discounting, and when they use it on Wall Street, at least sometimes when they use it, it means that you bring forward closer in time good news. And the AI market is a pretty popular place to be right now. And as long as the attorneys and the business people take their time, whatever's going on behind the scenes at Railtown, the mice will play like they always do. And they're trapped here, in my opinion, in Railtown. There's no way out for them. But their criminal behavior goes on. Now, just to be clear, there's probably many different aspects to it, but there's probably three categories. There's the category where you get a Jeff Easton getting a CEO to sign something, and then his hedge funds short it, and there's kickbacks, and the money goes up to one of our funds, probably, that finances it at arm's length. But it's just a big gravy train for everybody. Everybody nods and looks the other way. Attorneys make money. Of course, Jeff Easton makes money. The shorts make money. There's kickbacks. The funds make money. Prime brokers make. There's that whole game there. And then there's the opportunistic shorts, the cowardly shorts, the shorts that day trade. And they just know that every stock that goes up, particularly if they find out, talk to a few of their friends, they'll just take a position and they'll drive it down. They will, they can do it for an hour, a day, a week, a weekend, 2 weeks. But, if they can short 100,000 shares and get it down 50 cents, I'm not talking about Railtown, I'm just talking about any stock. That's a big number for them. That's a big, big number. And there's that aspect. And then there's the groups that just do it to destroy and steal whole market caps. So they're probably all interrelated, of course, but there's groups who have computers that watch if news comes out and says memorandum of understanding or it says LOI, because the SEC requires companies to telegraph what they're doing. The SEC does nothing, literally zero, to stop the criminal activity. Why? Because they're in on it. They're in on it. So it's just our markets. Anyway, so that's what Railtown doesn't have to have that kind of criminality just because there's a toxic financing out there. There isn't going to be. But while the lawyers are on vacation, while the businessmen are probably and women are probably so busy trying to lock down, it's a lot of people, a lot of conversations, a lot of human beings. They're all successful. They're all type, whatever you call it, A personalities. And they've got to get these signatures probably all across the board. While that's going on, the criminals can day trade for profit. And then they come on here, they attack me. Of course, I'm immature enough to get defensive and get upset. I've got to just start trying somehow to ignore it. But it's hard to ignore because they come in reasonably, they give really bad advice. I personally believe that, for example, Tony Dinero works with the shorts. Now he'll say, well, I'm calling him a short. No, I don't think he'd know how to trade. I don't think he'd know how to short or set up a computer to short, but I think he's paid by those guys. And he does their work, whether he knows it or not. He does their work sometimes, but he's just one guy. It's not personal against him. There's a whole group of them. So I keep coming on with the focus on only Railtown because I don't want you shaken out. This idea of discounting future good news, it aligns with my view that Railtown should already be a $4, $5, $6, $7 stock. It should be down here. It is down here because since February 11th, 2025, nobody can buy the stock that knows about it. Nothing can be discussed by research analysts. Nothing, they've had some great announcements, but they can't talk about revenue. They can't make, it's just it's a nightmare. The setup is perfect for criminality, but it's where we live. So I keep forgetting we're not in love anymore. So nothing's changed. This is Railtown. We have 10,650,000 shares. We have 7.6% of the company. That makes us pretty powerful. In terms of timing, we are in August. And next Friday is halfway through August. And I think most people are going to be on vacation. So I think the best thing we can do so our stress level is down and so that we're not breathlessly listening to these guys that always have a new story. How does a guy who brought you the disaster of CLNV, brought you the disaster of COSM, brought you the disaster, how does he screen his deals? And your question would be, well, how do you screen your deals? That's fair enough, I guess. But this is something I've been doing a long time. Doesn't mean I'm right. But I think you learn your battle scars and your hurts and your losses and your gains and your witnessing and your experiences and time spent with bankers and wealthy clients and institutions and CEOs. You start to get a sense of things. And I just, anyway, I don't want to get lost in negativity. I just want to say that if you can just plan on 4 more weeks, that's all we have to wait. 4 more weeks. This week, next week, the following week, and the first week of September. And I think that next week, we'll get the news on final completion of the February 11th announcement that Railtown is buying AI Partners. Now, having said that, it could be tomorrow morning. If you want updates from the company, follow Tony DeNiro, because according to Tony DeNiro, the company has talked to Tony DeNiro 3 times. I've never spoken with the company. And recently I can't get anybody to return any phone calls. So, and I'm, it's obviously I'm not talking to anybody at the company, but I'm talking about other investors, other people who have positions. No one's, I don't know, I guess I've pissed everybody off somehow. So I don't know what that means. I don't think there's anything bad going on in Railtown. We could look at why is it taking so long. Next Thursday, this coming Thursday, it'll be 6 months since they announced that they were going to acquire AIP Partners. Well, if the deal's fallen apart, they would have already told us. That's just a fact. They have to. They can't. They can't manipulate that news. So I don't think the deal's fallen apart, and I also think that's made evident by the. I'm not going to try to find them. I've shown them to you by the posts made by Corey Brandolini that this is going to be special, and then by Dr. Tom Core. More to come soon. I'm paraphrasing. Also, the 2 companies, the last news announcement, they entered into the agreement together. So I really don't think the delay is because the acquisition has fallen through. On the contrary, I think it's possible that the acquisition may be, I don't want to say bigger, but it may have evolved, because these are financial types, into recognizing that they need to get the 160 plus companies all to at least sign off that they're going along with it, because they want to acquire these companies over time. But also it might involve at least an option to buy with specific prices specific terms on the top, say, 30 companies. 20% of the companies represents 80% of the revenue. So it's not that it's bigger, it's just that it's more the execution of it, of this final acquisition, might be more comprehensive to make sure that the good stuff happens and that the criminals can't kill the price, like, for example, they did with Logic. So that might be it. It might be the lawyers are on vacation. I'm sorry. That's just how I see it. But and the regulators and all that. On the other hand, I don't want to go into fantasy land, but it's also possible that the deal somehow has morphed into something completely different. And maybe that's taking time. I don't want to emphasize that because I think that's dreaming at this point. I do want to go through revenue scenarios, size of market, and valuation, and just see if we can come up with some per share prices and then discount them to now and get a sense of maybe how family offices, institutional buyers, wealthy buyers, VCs, and private equity companies that focus on AI might start to see the value of Railtown as soon as this news finally is accomplished. I'd like you to be comfortable with holding the stock. Now, it's a different mindset. If you want to be a day trader or this idiocy, swing trading, swing high, swing low, sweet chariot, I'm coming for to carry me home. I don't know. You can go do that, but that's not me, and I don't want to do that anymore. Not with these type stories. I just don't want to do it anymore. I think I don't know how long it's been, 3 years, 4 years. Those are some pretty good years. And we had our chances to make money. If we had all behaved more like what's accused of us, pump and dump, if we had recognized that some of these guys come in here, start talking about a stock and it goes up, and if we had gone against the crowd and just let it go up and then get out, we would have made some money. But I think it's very hard to know when to sell, particularly if you believe there's going to be squeezes. I don't believe it. It's a big difference in my viewpoint. Me today versus me 3 years ago. Doesn't mean one couldn't happen. So my opinion is that Railtown, to buy Railtown right now, is as if you're asked to come into a private equity round or an early stage round, a pre-money round, a pre-IPO round, an R&D round, rather than the commercialization round, rather than the huge leap up the valuation that occurs as revenue comes in. And well, let's see if we can go through some of those thoughts. I just don't want you shaken out. These stocks, they all have a very similar story. And One of them might work, I suppose. Before I erase this board, I'm going to take a picture of it. No, I won't take a picture of it. But before I erase this board, it's not right anymore. I got to change it. This is number 11. This is number 10. This is number 9, number 9, number 9. And then right in here is number 8. So these are our top 11 positions. Top 11. I didn't combine accounts, so maybe next time I'll combine accounts. That's our top 11. Pretty powerful. There's some others that are very close to number 11. So maybe when I type out a list, I'll do the top 15. But the biggest account is 1.3 million. That's very powerful, guys. Very powerful. All right, I'm going to use that board to make some let's quickly go over Railtown. They have 4 companies. They call them companies. I don't know why they call them companies. Here, let me show you where they call them that. It says here, our companies. Our companies. Conductor, Rail Tracks, Lang Tracks, and Shredder. And then our partners, of course, Mila, AMI, AMII. These are Canadian if I did that, what happens? Picture in picture, didn't happen. Nothing happened? All right, didn't happen. Loser. Didn't happen. Anyway, I don't know why they call them companies. I guess that's how they do it. There's Shredder, Lang Tracks, Rail Tracks, and Conductor. Here, just to re-emphasize their partnerships with Microsoft, which seems to be a big deal to them. They have 3 different Microsoft listings, the Co-Cell and the Founders Hub, as well as Microsoft partners. Then they have NVIDIA and AMD. Anyway, let's go over those 4 things. Rail Tracks is for whatever a RAG application is, but it's to connect external data to large language models. I would guess this is sort of a translator, but it absorbs all information, no matter what the source of data. So you can build a RAG application, whatever that is, on your user data. It's a universal retrieval engine, pre-built connections or connectors to ingest unstructured data from any source and load that data anywhere. The pipeline allows developers to send data by event or in batch format and allows the team to run multiple cleaning and transformation steps to the data before it is saved in a unified database structure that will allow the team to interact and create RAG applications and automation on top of the data. And then there's the SR and ED claim consulting market. This product helps you keep 20 to 40% of your credits. No need to spend weeks researching and preparing your SR and ED report. Shredder will handle what would normally take weeks to do in just a matter of minutes. Save your time and keep your money. And then the other two companies are Langtrax and Conductor. Langtrax improves agentic workflows with request completion. Very hard to read that. Native LangGraph tools often lead to unnecessary complexity and rigidity. So they've set up this new framework, request completion, RC. RC simplifies the creation of dynamic input-driven workflows with a node, I guess, based architectural tailored for flexibility and scalability. In RC, nodes are something with clear input and output parameters, each capable of involving others. It's hard to read. Modular, interconnected workflows. What sets RC apart is its approach to decision making in each node. Each node determines its subsequent actions internally, eliminating the need for an external control flow layer. Anyway, that's Langtrax, and I can't read the rest of it. It's too small, the print. Now, Conductor seems to be what everybody's interested in. So I just showed you they have 4 companies. Let's assume zero revenue. Let's assume zero revenue for Railtrax, zero revenue for Shredder, and zero revenue for Langtrax. And let's just focus on Conductor. The first end-to-end Conductor developer productivity engineering program for the entire team. And I've read that to you before, and you can look it up. But let's just focus on Conductor. And before I go much further, let me look at your comments, because I'll start losing your comments if I go into the media. So let's go through some comments. Let me bring this closer so I can deal with it. Hi, Paul Hardiman. How are you? Hey, Clay Schoolfield. You're number 8 on our list of 11. Eddie Eagle. How are you? Bull market investor. Let's go. Let's go. Back to Junior's Farm. Darren Collins, good evening. Bull market investor says good news is coming. I hope from your lips to God's ear. Catherine Morris, welcome. Hi, William. Hi, everyone. Hi, Catherine. Ken Nigan, GTI receiver, please explain. So I have a reason to sell GTI for Railtown. Well, I don't really want to get bogged down in that. I'll do it one more time. I mean, it's Ken. I don't think you should be investing in anything at all. I think you should put your money in the bank if you can't. I mean, I've talked about this so much, but if you can't suss it out yourself, I don't know. Receivership is legal, okay? Receivership is lawyers, okay? It's not financial. There's nothing financial about it. So Cam Newgan, I don't know how many shares of this crappy company, GTII, you own, but it's a shell. I still own shares in it. I lost a lot of money in it. GTII is a shell. Why own it? There's two reasons to own GTII. Can't believe I have to talk about this. It is a waste of time. There's two reasons to own it. Short squeeze and a hot new trading platform product. Those are the two reasons to own it. There will never be a short squeeze in GTII. The trading platform, it's better than every other trading platform, and AI is not going to create other alternatives. Anyway, I'll leave that up to you, Cam Newgan. You can make up your own decision on that. GTII as a shell. Best scenario. Best scenario. The new company takes 85% of the shell. You, Cam Newgan, are left with 15%. Best scenario. The receiver is taking 20% of that. It's a little less, but the arithmetic is easier. So that leaves us as shareholders, I'm still a shareholder in GTII, with 12% of the new co right out of the gate. Now they need to give shares to the whales who paid for the attorneys, paid for the receiver, paid for the detectives, covered the costs of filings, covered the costs of the fight. I'm going to guess that that portion of the conversion will happen on this side of it here, not on the overall company. So I would guess this will go down to, if the receiver's getting 20%, I bet the whales ask for at least 20% for what they did. So that gets it down to we have 9% of the NewCo. So original GTI shareholders will come out of the gate in the best situation with 9% of the NewCo. Serenity now. Serenity now. Serenity now. They will raise capital. My guess is enough capital will be raised and stock will be issued to insiders, CEOs, directors, employees, whales, that the stock will be diluted by at least 30%, maybe as much as 50%, but let's say 30%. So of the 9%, we'll keep maybe 6% will be our out of the gate ownership of GTII. 6%. I don't know how many effing shares you have, Cam Newgan, but I will think it's very few. But there'll be 100 million shares, maybe 120 million shares. No, it'd probably be more than that if it goes to the whales. Maybe 140 million shares of GTII will be 6% of the company. So there'll be 2.3 billion shares outstanding. And they'll have to do some reverse split. So I'm not going to talk about it any further, Cam. Your shares are worthless. If you want to hang on to it, you hang on to it. You can, according to Richard Hoffman, who came on here the other day, he said you cannot trade the stock in the United States. Well, I begged to enter into evidence that at least a dozen, 10 to 12 people here have, to my memory, have told me that they've sold stock in GTII. It's not a real market. And I've just tried to show you, you can do your own thinking. You don't have to hear it from me, but you're going to be crammed down massively. And as the financings come, the only way you're going to be able to own your percentage position, is add new money to it. I'm sure that the new CEO, who apparently is a good guy, will give an opportunity for you to invest in the new situation should you decide. That's when you should spend time effing thinking about GTII. Until then, it is a complete write-off. It is worthless. It is a stock you should not spend any more time thinking about, and please don't ask me about it anymore. If you're serious about making money, focus on Railtown. Don't focus on an endlessly worthless looking back on GTII. It's gone. Poof. It's a piece of junk. It's not going to make you any money unless you put more money into it, which you should not do now. You shouldn't buy the stock. It's trading at 16 cents. By the time they get this deal done, it'll be worth a penny. And you're seriously asking me for a reason to sell it? I got to move on. It's just the absolute stupidity. Hey, DB, good to hear and see you on Sunday evening. Looking forward to seeing how Railtown is going to move in the next few days. But I believe that real strong move upward will happen in September. Yeah, I think we have to plan on September. I'm not receiving any kind of, even a hint of information of any kind. So I'm kind of operating with my own instincts. And I think you have to plan on September, but that's okay. It's only 4 weeks away. My opinion, though, the stock will go up next week, following week. The next 4 weeks, stock will go up. Now, they're going to try to get it to go down, but I just don't see how they can. I mean, I guess there's a risk that for some reason the Canadian Prime Minister announces that the country is, I don't know, I can't make up bad situations, but maybe the deal falls through and in a 3-day attack it gets destroyed. But I want to show you revenue, ignoring 3 of their companies, just focusing on Conductor. And I also want to show you revenue ignoring AIP, just completely ignoring AIP, completely ignoring the merger. And Railtown's worth more than where it's trading right now. I just don't see how it goes down. I believe some lawyers who were supposed to be on our side are maybe discussing how they could screw us over once again. No transparency from the lawyer's receiver. Let's go through this again. I believe some lawyers who were supposed to be on shareholder side, maybe how they could screw us over again. No, you're talking about GTII? No transparency from the lawyer's receiver? GTI is worthless. Guys, it's just worthless. There's no asset. The short position is worthless to us. Receivership, I don't even know. I don't even care. I don't even care. It's a waste of time to follow it. Let the attorneys do it. That's what attorneys do. But I don't believe it'll get out of receivership with the large short position. It might somehow. But the short squeeze story is ridiculous. That's my opinion. No transparency from the lawyer's receiver. Worried? I wouldn't worry about GTII. Write it off. It's worthless. Put a big zero next to it. You lost your money. I lost my money. It was a lot. It was a lot. A lot of money I lost in GTII. So I'm not being cavalier. But guys, to me, just my situation. I've got a small account. I've got an IRA and a little tiny bit more. And, I'm not going to make it back with GTII. Absolutely not going to make it back with that. So, and I don't ever want to buy the stock again. I don't care if somehow they manipulate it, the whales put up money, they have this, they have a new product, a great CEO. It's going to be the same crap. Reverse merger, reverse split, take a financing from somewhere, try to make it squeeze. It's just all the same noise. It's not investing. So anyway, I'm not worried about GTII because to me, I lost all that money. It's gone. And it's a lot in my case. So anyway, Cam Newgan has, Nguyen has 200,000. Wow, good for you. I'm going to write that down. I don't remember that being your position, but that's fantastic. That's very good. There's no reason to hold on to GTII. If you can call in and get whatever it's trading for, 16 cents, 12 cents, 15 cents, 20 cents, some people got, I put it all into Railtown. But if you got 15 cents on GTII, you could buy a third of a share of Railtown. So every 3 shares you sell of GTII, you can buy 1 share of Railtown. Your shares of GTII at post, if anything happens, post merger with whatever, post settling everybody up, financing, doing a reverse split, listing it, I think it'll be worth 1 to 2, 3 cents a share at most. And if it takes 3 of those shares, call it 2 cents a share, that's 6 cents. If those 3 shares buy you 1 share of Railtown, I think Railtown will be $5, $6. Why anyone would hang on to GTII, I have absolutely no idea. And I'm sorry I'm short-tempered on it, but it's just a gigantic. GTII has been a disaster. It's been a disaster listening to it. It's been a disaster listening to, Trento Mines, the law firm, this and that. The CEO was apparently, according to the filings, was corrupt. Do I have to go through everything they tried to do? None of it worked. The guy that was working on your side ended up so frustrated with the CEO, he said, screw this. And the whales have lost a ton of money. It's just dreaming. It's time to be realistic. The money's gone. The criminals took it. The Kramers might have been working with Reichman. The Kramers are happy. They're never going to go to jail over it. Do we have to keep talking about GTII? I guess it's the pain that just keeps giving. Just keeps giving. The same people that told you GTI was the greatest thing in the world are telling you it's going to somehow work. It is not going to work. Now, if the new CEO comes to you with a prospectus and says, I'm raising money, and he gives you a chance to invest, well, then you can study it. But until then, I wouldn't own it. DB, I'm number 9 on your board. Number 9. I already erased it. Number 9. I guess Ken Nugent is tied for number 8. So you might be number 10. I have to expand it to 12. But that's pretty good. Diana, will Railtown hit 40 cents? Let me look at the chart. It could, anything's possible, but it won't stay there. Yeah, let's just look at the part. All right, I see you ocean sailing. I know, I shouldn't get upset. I just get so frustrated. But you're right, I shouldn't yell. You are right. And Neil would have me wiped off the planet for being too loud. No, I don't think it can hit. I don't think 40 is the number. I think they may try to get it down to 47. And if they are able to do that, 45. And if you really want to be painful, 42.5. But I don't see that happening, Diana. I think this is the lows here. I actually think, they may try to get it down to 47. I just don't think they're going to be able to do that. And I'd actually take the other direction as the path of least resistance for this stock. I think it's much more likely it's headed to 57.5 tomorrow or next week than that it's going to go down. They've tried to get it down and they just haven't been successful. It would help, of course, if there were any announceable progress, but I look at this chart differently. You always got to try to look at it. Problem with this chart, I can only do it for 7 months on the chart I prefer because of one print. Yeah, this is the low, Diana. I don't think it's going to go below this. I think this is support and it'll bounce up tomorrow, not down. But they're going to try to make it go down. And if it gets over sort of 55, 56 cents, I think you're headed to 70 cents. I'll try to do a bigger chart tomorrow and draw some lines, but I think it's on support. Obviously, support doesn't always hold, but I think it's on support. Third time I come on, you're yelling, breathe, but don't let them upset you. Yeah, actually, it was a boring weekend, but the weather was beautiful, and today I could walk. I'm so happy, so grateful. And I put shoes on. I haven't been able to put shoes on. So I'm very grateful today. Yeah, I lost a lot more than that. I lost hundreds of thousands of dollars in GTII. And I still have 11,000 shares, which represents the dividend. But I owned more than 110,000 shares. So I a lot more. So, it was a bad idea. It's just another manipulated idea, bad idea. I do think, in defense of everyone involved, that it was squeezing. But the system has ways to come and pop the bubble. It was three guys. It was the CEO of COSM. It was Lou, and it was Frank Benedetto. But I'm not saying they knew what they were doing. I don't know what they knew or didn't know. But if it hadn't been that, it would have been some other mechanism that the system would have popped the bubble. And then you've got the nightmare of Alpine and the Kramers and the whole thing. It's just an energy sink, a thought process sink. There's no way out. Once it's in the legal hands, it's not a financial game anymore. I mean, I'm sure legal can do well with it, but it's no longer something you can trade and make money on. And I've already spent half an hour on it here today. And it won't make any money for anybody tomorrow. Railtown could make money for people tomorrow. It might take 4 weeks. GTI is not going to make any money for anybody in 4 weeks. I don't think GTI will ever make money for anybody again, unless you put new money in. Oh, you have 200,000 shares of GTII, I see. Well, it's worthless. It's worthless. Let me give you. Let me give you a number. If the number of shares in GTII is reduced to, let's say, 120 million, but I don't know what the whales, they're going to have to get paid back cash or convert into stock. Let's just call it 125 million. I have no idea if that's what the number is going to be when it gets out of receivership. But remember, the last numbers I heard, they're going to get it down to as close to 100 million, but then the receiver gets 20 million shares or 18 million shares or something. Some number. I'm not saying I'm exact. So if you you've got 200 million, you have 200,000 shares. There will be 125 million shares outstanding, maybe. It could be much more than that, but this is the most conservative. So you have 0.0016 of GTII conceptually. If I'm right, net of, I mean, it could be worse than what I gave you. But if I'm right, we end up with 6% of NewCo. You'll have 0.00096 of NewCo. And let's say this guy comes out of the gate hot, running hot. Panama. Let's say somehow he makes a trading app that has revenue and it's going to go up with the likes of Morgan Stanley and TradeStation and Webull and all that. And let's say it's worth $50 million, 50. You'll have $4,800. $4,800. When would that happen? A year from now. So if you could sell 200,000 shares today at 14 cents, you'd get 28 grand. I'd do that all day long. You could go in and buy Railtown. If you get it done quickly, you buy 50,000 shares of Railtown. Railtown in a year's time could be worth $2 million to you. So I'm sorry. I agree with ocean sailing. I shouldn't get upset, but it just frustrates me so much, guys and girls. Guys, this idea that we can catch a short squeeze, we have to just throw it out of our mind. I didn't, but many of you experienced AMC and GME, and then Finger and GTII both ran. I think they were squeezing. I think it was so dangerous that the system came in with a strategy that worked, and COSM sucked $35 million right out of the balloon that was pumping the other two up, and they could have run. That was our chance. The system won, we lost. And we've been trying to recover ever since. Finger has had at least 2, maybe 3 waves upward since, but most of us didn't trade it properly. And GTII is just dead as doornails. There is no management in GTII. There is no product at GTII. There doesn't seem to be any real following the rules at GTII. It's in receivership, so it's not even operating as a company. Um, uh, it is one of hundreds of shells that are available. It, I think, may end up being one of the cleanest if it goes through the receivership process. But it'll be a cram down so that Cam Nguyen, at most you're going to have $5,000 worth of stock a year from now. At most, I'm telling you, it's not even worth thinking about. I probably owned 200,000 shares of GTII at my peak. It might have been a little higher than that. So I know, but I didn't take any money out of the market. I think I got out of GTII at, I really don't remember, 15 cents, 20 cents. And I put it just, before it stopped trading, really, I put it all in Logic. So it's not like I made any money. And I think Logic was another ripoff. Guys, the criminals have been at this a long time. They work together. They are above the law, outside of the law. They own the lawyers. They own the regulators. They own the prime brokers, the market makers. There's no such thing anymore, but those still exist. They own the lobbyists. They pay off congressmen, the big funds. They work for the big funds. We're not going to win. We're just not going to win. Railtown's different. So when I believe if you call your brokerage firm, you might get lucky and you might pull enough cash out of GTII. I tried, they won't let me sell it at E-Trade. If they would, I'd do it, but they won't do it. I think you could buy 50,000 shares of Railtown and you can change your life. But if you want to hang on to GTII and continue to believe, and Ocean, I'm trying to not, I got to breathe deep, the gathering doom. But if you want to keep believing the bullshit, you're never going to make money in GTII. Never, ever, ever. I don't know who did make money. Maybe some of the guys promoting it got stock and were able to sell the stock and walk away with some cash. I never got stock, and I certainly didn't make money. I lost a lot of money, but I don't know how many times you got to get smacked upside the head before you realize that's not the bar to go into. You don't go down to you don't go down to Paul's pain room or Sal's slingshot room or Louie's take your lumps room. You go upstairs to the Velvet Lounge where people want you to sit down and they give you a good cocktail and a nice hello and treat you well. This market that we're in, they don't treat us well. And there's nothing accurate about the stories and the promises and the predictions that have been made. Nothing. It was GTI, nothing. I think they tried to make it work. And I think it was squeezing. But the system always wins. So I'm sorry, Ken, that you own so much of that. I don't know what you paid, but and I don't know if you're going to be able to do it, because Richard's probably right that if it weren't on the expert market where brokerage firms can put out informal bid and asks, if it weren't for that, you probably couldn't sell it. But a lot of people have sold that stock. The guy Steve, who owns the largest single position in Railtown, he sold stock at 20 cents. I believe Julie Kim sold stock at 20 cents of GTII. That's my memory. And they bought Railtown down around 28 cents, 25 cents. That was a nice trade. Beautiful trade. They've doubled their money. GTII's gone down. And here I am speaking about GTII, which is a waste product of a stock. It's just a complete waste product. If you're going to study to be a lawyer, it's a perfect thing to study. You can learn about receivership. You can learn out how a receiver can fill out 3 or 4 forms. The whales can finance the other attorneys and detectives, but the receiver gets 20%. Well, I think it's 18% of the company. You can learn about that. You can learn about how receivership works, where it gets cleansed and certain things get wiped out. It's a great study for that. You can also study all the filings where Reichman stole money. Reichman, apparently, I'm not making the accusation. Reichman, the daughter got money. Reichman gave money to charities. It'd be a lot of fun for you to read that and see what happened. And then you can study if you care to, unless you're like Cindy Lou Who, and you say, oh, you're blaming a dead man. I'm not blaming a dead man. The fact that he's dead is unfortunate. But I am saying that COSM, whatever it's called, whatever that company's called, took 35 million out of the market by getting all of us to get out of GTII and Finger. I didn't do it. I did a little bit, and rush over to COSM, and it popped the bubble. So the squeeze, it was an engineered squeeze. It didn't work. It didn't work. And the story today on GTII is that it's going to squeeze. It's never going to squeeze. Never. Now, Ham will tell you, apparently, I'm not picking on him, it's just what I hear, is he thinks I have my head up my ass on that. Well, that's fine. We'll see whose prediction is right. All I know is Railtown is not a short squeeze story. Railtown is not a manipulated stock. It's not an engineered stock. It's not a guy sitting with a drink and a cigar and a phone and trying to make this happen and that, and then a whale comes in, and then we're gonna throw in this company and that company, and it's not one of those. It's not one of those. This really ruins it just ruins it. Ken, talking about GTII is a complete waste of time. From a financial standpoint, if you're interested in the legal proceedings, be my guest. I'm not. Call me when it's all over with. I thought GTII was sell only. No, I heard of some people buying it, which I think's insanity. I think it's insanity to buy it. I would sell it in a heartbeat, Guys, I'm telling you, I don't know why. We'll take one case. We'll take one case right now, and I'll show you. I hope it's a low side case of what Railtown's worth right now. I hope it's very low. I think I can predict what it is. It'll probably be around $4, but I want it to be low because I want to show you that Railtown's worth more than it's trading for right now. And I just don't know why anyone, if they're given a chance to sell GTII, wouldn't put it in Railtown. There's a big effort out there from a lot of people whose livelihood depends on it. To get you to think Railtown's just one of these other stocks, as one guy put it, and many more. Railtown is not these stocks. And I'd like to try to show that to you. I see, Ken. So you want to sell. I would call your brokerage firm and put it out there. Last price I saw in GTII was 16.5 cents. I would call in and I would say, can you get me a market for GTII? And they'll say, well, and he said, no, I just want to know what's the bid and ask? And call me back. I'm willing to sell 200,000 shares at, you can tell them on the phone that you'd like to get 16.5, but you just like to hear what the market is. And you might do it for less. There's a dog outside barking. I'd like to go say hi to that dog. Sounds like a good boy. Sounds like a good boy. Yeah, I would. If you can do it tomorrow, you might be able to buy 50,000 shares of Railtown, and you'll be so happy you did that. I only have 11,000 of GTI left. I called in to Morgan Stanley and tried to sell it, and they give a lame excuse because the system is gummed up. I do believe that part of the story is correct, but they're not going to allow a squeeze to happen, in my judgment. But if you only have 13,500 shares, that's a very good position. It really is. It can make, if you paid $200,000 for your GTII, I don't know what you paid. I hope you didn't pay that much. But if you paid $200,000 for that, Railtown, with your position of 13.5, Railtown would have to go to $15 for you to make that money back. I think Railtown will, but Railtown's not hot money. It could take 18 months, 24 months, 36 months. On the other hand, it could happen very quickly because that overall market is buzzing. But I think Railtown, depends on how much you paid for your GTII. If you paid more than that, obviously the stock has to go higher. But Railtown is the way to get your money back, in my judgment. Oh, I see, Jim. I got you. Yeah, 200 GTII. Whatever happened to that nitwit what's the Monty Python scene with the nitwit? Nitwit. CRTD is our function. Yeah, it's terrible. I think he did a 1 for 500 reverse split. Yeah, you're still number 9, DBM. You're still number 9, number 9, number 9, number 9. Northeast Iowa. No news is good news. I agree. Patience. Railtown will have its time to shine. Let's just go through this. A low case. I just want to go through a low case revenue story with you. This research report, a year old on Railtown, and it has a $2 target. And I don't know if you can see here, it's 12 times revenue, and they assume 170 million shares outstanding. Now they talk about it a little more detail here. I just got to find the paragraph. So they talk about the 5 different uses, but we're just focused on conductor. He says here, based on our discussions with several customers, the value proposition of Railtown AI's tool is quite impressive. This level of efficiency, which he described, translates into a significant return on investment. The pricing per user seat is considered reasonable, saves time, and creates value. Okay, so here's the addressable market. I lost my yellow pen, so I'll use my orange pencil. The addressable market by last year was 28 million developers by last year, 28.7 million. And then they say, giving all the dynamics of growth and all that, but they assume an average revenue per customer of $108 per year. You see that? $108 per year. Which is totally in line with his study of Railtown's current pricing. So Railtown's addressable market is currently estimated to exceed 3 billion. 3 billion. And then they say this is the addressable market in terms of going out to that market to get customers and to get revenue. There are several reasons to believe this market could expand further, such as new features could create increased pricing. The current pricing is on a per user, per project basis. So a single user might be spending more than $108 a year because they might be working on more than one project. And Railtown's target market could broaden beyond just software developers, especially with the launch of its API for no-code virtual software development. So the point is, the number could be much bigger than 3 billion, the market that they're targeting. Then they said revenue. Given Railtown's first mover advantage and the track record of its founders and senior management, we believe there is a high probability of Railtown capturing a meaningful market share. I should look up what meaningful means. Of the total addressable market over the next 3 years. We believe that the adoption rate of Railtown's platform will be higher in the United States than the rest of the world. So we expect Railtown AI to commence generating revenue in fiscal year 24 onwards, but we're in a quiet period, so we don't know what that is. Given the early stage life cycle of the company, we take a slightly medium, longer time horizon to estimate the revenue. We use a market penetration rate of 3% in the United States and 0.5% in the rest of the world. So they forecast revenue for full year 27. This is written a year ago. And we use an enterprise value over revenue multiple of 12x on full year 27 revenue to be the target price for Railtown AI Technologies. And they used a 20% dilution factor. So it's 170 million shares. And their target is $2 a share. So I would submit to you that the multiple that should be used now is 25 times. I think this is a very low estimate. 3% times 3 billion. That's 90 million divided by 170 million shares. Times 12. That's $6. I don't know. I don't know that they're giving us how they came up with this target. The addressable market is 3 billion. So 3% of 3 billion equals 90 million. And if you use 25 times that as a purchase, a valuation number, that's 2.5 billion, 2.25 billion divided by 170,000 shares. I get a completely different target. I get $13. I don't know why their target is $2. But anyway, let's not get lost in it. We'll use the low case here. A year ago, the target is $2. Right, let me just go through what I just read to you, and let me just give you the revenue based on a couple of things. let's go through, I've got to delete this, delete this, delete this, delete this, delete this. Let's delete this. Let's delete this. I'm going to delete all of this. Delete, delete, delete. Okay, now I want to add I don't know if they're going to let me add all this. I hope so. Maybe. They'll say I have a lot of files. Nope, they let me do it all. So this was just an article on that Windrift acquisition. We don't have to spend a lot of time on it, but it talks about valuation. So I think it's pretty interesting. Oh, let me get this comment down. This is the Google, I Googled it. AI startup Cognition recently acquired Windsurf, a provider of IDEs, which is what Conductor is or does. Shortly after Google bought the talent of the company. So Windsurf's annual recurring revenue, 82 million. The valuation, 1.3 billion. So let's just use 1.3 billion quickly and 170 million shares for Railtown. That's a $7.64 number. The acquisition by Cognition AI and the licensing deal with Google suggests that Windsurf's technology and expertise are valuable within the AI-driven coding and business intelligence sectors. The reported valuation and revenue figures indicate the significant potential seen in companies operating in this rapidly evolving space. So I'm going to take that one down, 82 million. And now we'll go to this. Did Windsurf sell too cheap? The wild 72-hour saga. This is an older article, but the last 72 hours in AI coding, which is what Railtown is, have been nothing short of extraordinary. What started as a potential $3 billion open AI acquisition, let's just use that number, 3 billion divided by 170 million, which is, that's $17.64 a share. Anyway, ended with Google poaching Windsurf CEO and co-founders for $2.4 billion. While Cognition swooped in to acquire the remaining company, with Windsurf generating 82 million in annual recurring revenues, well, enterprise revenues, doubling quarter over quarter. It seems almost too cheap. I'm not going to read the quote. Not going to read the quote. So Friday, there was a $3 billion offer that expired Friday evening. Google hired all those guys for quite a lot of money. Monday, Cognitive bought. So to understand whether windsurf sold too cheap, we need to examine the broader AI coding landscape. The numbers are staggering. The revenue leaders, Cursor, 500 million in annual recurring revenue. The valuation, 9.9 billion at a 20 multiple, 20x multiple. Replit, 100 million ARR at a 1.16 billion, a 12 times multiple. Windsurf, 82 million ARR, and we already talked about the double nature of the buyout. Lovable, 50 million in annual recurring revenue, and they raised money at a $2 billion valuation, 40 times multiple, 40x multiple. Bolt, 40 million in annual recurring revenue. They raised money at 700 million, a 17.5x multiple. So here's some various valuation scenarios for windsurf with an $82 million annual recurring revenue. Traditional, 8x. So you'd value the company at 600 and some million dollars. High growth, 12x. You'd value it at $1 billion. Premium, software as a solution, 15x. So it'd be $1.25 billion. You give it a premium as an AI company, 20 times annual recurring revenue, it's $1.5 billion. If it's an AI hypergrowth, you give it 25 times ARR, $2 billion. AI speculation, 30 times annual recurring revenue, $2.5 billion. They list 3 comparable companies, Cursor, Bolt, and Lovable. The multiples were 20x, 17x, and 28x. These multiples reveal a market in full speculation mode. Traditional strong B2B, business to business companies trade at 10 to 15 times annual recurring revenues. But AI coding tools are commanding 15x to 40x multiples. I've actually heard it's as high as 150x, but 15x to 40x, far higher for top teams. Windsurf's 82 million ARR should theoretically support a valuation of 3 billion to 6 billion using these benchmarks. The fact that OpenAI was willing to pay 3 billion and Google paid 2.4 billion just for the talent seems like Windsurf was valued appropriately. The question is, did Cognition get an incredible deal? The AI coding space has become a strategic necessity. The AI coding space has become a strategic necessity for tech giants. Microsoft's GitHub, remember Corey talks about that all the time. Microsoft's GitHub Copilot reportedly generates $500 million annually, while Anthropic's Claude code has become a significant revenue driver. This isn't just about productivity tools. It's about controlling the future of software development. It's a pretty big statement. It's about controlling the future of software development. Windsurf lost access to Anthropic's code models in early June when Anthropic cut off API capacity, citing competitive tensions with OpenAI. Anthropic co-founder Jared Kaplan explained, quote, "It would be odd for us to sell Claude to OpenAI. This technical dependency likely weakened Windsurf's negotiating power." Speed versus price. The announcement came just days after Google hired away Windsurf's CEO, leaving the company in operational chaos. In such circumstances, speed of execution often trumps price optimization. Cognition offered stability and employee protection that may have been more valuable than maximizing acquisition price. And then the vibe coding revolution, whatever that is. Comparable companies, see that at the top, trading 17x 40, 17x to 40x. So summarizing that whole part, the market dynamics favored fast acting over negotiating for the best price. So what are the broader implications of this deal? Number one, talent wars are intensifying. Google's $2.4 billion reverse acqui-hire shows how valuable AI coding expertise has become. When talent commands nearly as much as an entire company, traditional acquisition arithmetic breaks down. I'll come back to that. Number two, platform dependencies are risky. Windsurf's loss of Claude access demonstrates the vulnerability of companies dependent on third-party AI models. Railtown is not dependent on a third-party model. They have their own. Three, speed matters. Decisive action created more value than prolonged negotiation. The verdict: did Windsurf sell too inexpensively? In pure financial terms, probably yes. A company generating 82 million annual recurring revenue with enterprise revenue doubling every quarter should command premium multiples in today's market. But Windsurf's solution was unique. Technical dependence on Anthropic, leadership exodus to Google, and operational uncertainty. It was a fire sale. The real story isn't whether Windsurf got the highest price, but whether the AI coding market has reached sustainable valuations. With Cursor at nearly 20x and Lovable at 40x, we're witnessing either the birth of a new transformative category or inflation of a spectacular bubble. And that's something we do have to be aware of. The Windsurf acquisition represents more than just a transaction. It's a window into how quickly AI markets can evolve and how traditional valuation metrics struggle to keep pace with technological disruption. Let's just go back to this vibe. What makes these valuations interesting is vibe coding, a term coined by somebody. The growth rates are venture capital fever dream numbers that go beyond typical B2B metrics. So that's what it means. So let me just show you something I've shown you many times before. These are the last 6 years of AI deals. The low end is 12%, the high end is 50%, and in the middle is 25% times revenue. That's 91 deals. What I suggest we do is use 25x. I've heard the number is as high as 150x. I've heard the number is 100 to 150x. And I'm sure that's all might be, but let's just use 25x in our calculations. So let's use that target market there that the research uses of 3 billion times 3%. We just did this, I know, but I want to get a baseline. That's 90 million in revenue a year. And we'll use 25x. So 25, we're not using 12, using 25. That gives a valuation of 2.25 billion. That's just for Railtown, probably just for Conductor. We'll divide it by 170 million shares. The company currently has 140 million outstanding. That gives a target of $13.25. Now, this is a report written. We're using a target market of 3 billion times 3%, just 3%, saying that that's meaningful. So 90 million in revenue based on that. 2.25 billion valuation divided by 170 million shares gives you a target of $13. Now, let's discount it. Let's be really harsh. Let's take 3/4 off of that. Let's only bring forward 1/4 of that number. That's very severe. But that would make Railtown worth $3.30 now. Or soon, maybe in September. These numbers that I'm giving you, once Railtown's deal is finished, guys and gals on all the various investment banking desks and research desks and private equity, wealth desks, they'll be doing these numbers and they'll do it better than I do it. This is really low, but I'm trying to be harsh. So I'm going to write down that is the low number. Now another I'm just looking for other market sizes. Which these are from interviews. So what Corey, in two different interviews, he talked about there's going to be $300 billion in spend. And I think that's annually. 300 billion in spend on AI software developer tools. And he said that won't be a cost to companies because it'll actually add income and revenue and efficiency. But 300 billion, let's not say 3%. Let's just say they get 1% of that. Let's see what that is. That's a lot. It's a lot. 3 billion in annualized revenue. And we're going to multiply it times 25, which is a lot, I know. So that's 75 billion in valuation. It's just 25x. So if we use 170 million shares, that's $441. Let's only take 25% of that. That's 110. That's the numbers I did. 300 billion spend, 1% market capture, 3 billion times 25x, 75 billion, $441. Take 25% of that to discount it. That's a $110 target. So my friends, I think a discounted target range for Railtown it's a range. I tried to be conservative. $3 to $100. Now, I'm not saying that's happening overnight. I do think this part of it will happen essentially overnight. This part, you might have to wait a year and a half, 2 years. But it could happen very quickly. And I think that's your broad range. I could break down other cases, but I think that's the broad, trying to come with the target market, assume what they get, and use 25x as a multiple. If you want to just want to use 12.5, you take half of that, 150, and you take 55. If you want to use 50x, you double it, $6 and $200. These are realistic, I think, targets for Railtown if if the revenue projections happen quickly. There's an overall stock market that could be running into tough times, but also the AI, a lot of people wonder if it's a bubble. Not everyone thinks it is. A lot of people think that AI is in the AI 2.0 is just at the beginning of a huge move, which is kind of where I think it is. But if they can show, if people, once they get this deal done, if not you, and maybe there's not enough information in the press releases, but people that have knowledge of AI and have access to the company, and the company can actually talk about things because they've put the release out. I think that's the range that analysts, I'm not saying research reports, I'm not saying things you or I will see. I'm talking about what analysts on institutional desks or in retirement management or in these big pools of money. I think this is a range of numbers. It's a big range they'll be operating with. And that's why I'm so excited for the stock to show meaningful price rise when the news is finally done. Slowtronic, rail easily $2 to $4 by the end of that's I'm laughing because that's just silliness. I think you could put a 0 on the end of those numbers and still be accurate by the end of the year. It'd be more of a bet then, of course. But I think the stock could be $20, $25 by year end. It's a big move. It's a big move. I don't see any more comments really. So I might have to come up with something to talk about. Hey, Donna, good evening. Ward. Well, I have that. I've done that before, Ward, but I did it from their website. Let me try it the way you are suggesting. AI partnerships. Network partners. The hell? That didn't work. I can't find that list. So what'd you do? You do AI partnerships. Corp. All right, let me do that. AI Partnerships Corp. Affiliate network. I don't know how to do this. Google DeepMind? I'm not successful with that. But I've shown you this before. Here's some of their banking sector. It's the start of that's the end of their banking, start of their manufacturing sector. This is their manufacturing sector. I mean, guys, it's really big. That's the end of their manufacturing and the beginning of healthcare. You can find it on their website. That's the end of healthcare, beginning of sales and data. More to sales, etc. End of sales, more of AI development. They have Railtown AI right down there. See it? Railtown AI right there. End of development, cloud, beginning of security. End of security, beginning of customer service. Actually, customer service only has one. Retail, restaurant, and recruiting. And the last three. It's a pretty long list of companies that are in the network. Oh, there's more here. I don't know. It doesn't say what these are. You can find it on their website. Exactly. A bratwurst and a cold beverage on your what brokerage? Well, in the United States, I use E-Trade, but if you're offshore, you could buy it in Canada. I don't know which brokerage firm, but you could buy. I can't think of it. A TD Ameritrade, maybe. Toronto Dominion Bank. Anyway, the symbol's different. It's RAIL dot CN or something like that. Let me show you some things. Let me show you some things. It's going to say, you sure have a lot of files. And I'm going to say, yeah, they didn't give me everything. I'm going to show you a couple things about real estate. This is equity in houses and mutual funds. Look who owns the most, the baby boomers. Baby boomers. Here's the baby boomers. They own the most real estate. Gen X and millennials. So, point being, baby boomers are going to not all be Clint Eastwood. A lot of them are going to start dying. It's going to be a lot of wealth transfer, but also, who's going to buy those big houses? Nobody's having babies anymore. Baby boomers are responsible for 81% of wealth transfer. Gen X is going to inherit $14 trillion in the next 10 years. By 2048, 124 trillion. 124 trillion. That's a lot of squid. A lot of squid. Here's where retirees, they're all going to die is the point. But this is where retirees own the most real estate wealth. It's basically Florida, isn't it? All right, and then I want to show you, what's this one? Here's the question. Who's going to buy your 21 million homes? Baby boomers are getting ready to sell 1/4 of America's homes over the next 2 decades. Problem is, many of these properties are in places where younger people don't want to live. Can't live if living is without you. I can't give anymore. All right, look at this. If you think that number that I was giving you was 75 billion, that was my top number for valuation. Look at the biggest companies in the world, and that's before these stocks went up. They're all tech companies. Now, yes, that could be a bubble, but in a bubble, that gives them motivation to spend their stock to acquire other companies and maybe hold the bubble off, the popping of the bubble. But look at all of them. They're all tech. Meta, Tesla, Oracle, AMD, Amazon, NVIDIA, Alphabet, Microsoft, Apple. Oh, data center capacity. I wanted to show you this. The United States is the winner. China's behind us right here. Middle East is way behind, but I would expect them to catch up. And then up here in Europe and the UK. But the United States, Canada, we're where it's at. Top largest companies, look at them. Microsoft, NVIDIA, Apple, Alphabet, Amazon. And then down below, Tesla and Meta. Guys, they can afford to buy Railtown. Largest companies as of last year. Apple, NVIDIA, Microsoft, Amazon, Alphabet, Saudi Aramco. Then it continues. Meta, Tesla, Broadcom, TSMC. 9 of the top 10 companies are all technology, and they all would be competing potentially for companies like Railtown. Is Railtown over the counter? No, it's Canadian Stock Exchange. It's one of the top 25. They've got a, I think it's called CSE 25. Railtown's one of those. Let me see what else I had. Can't live, I can't live in it without you. I can't live anymore. Oh, no, I can't forget this evening or your face as you were leaving. But I guess I'll say, oh, you always smile, and in your eyes your sorrow shows. Oh yes, it shows. I can't live if living is without you. I can't give anymore. Oh, this is population decline. Pretty scary stuff. We're not, I'm not picking on women, but women are the only part of the species that can have children. But women aren't having children worldwide as much as they used to. So we may be in for population decline by the middle of the century. Pregnant pause, births per woman. It's worldwide. Look at India, fall from 6 births per woman to 2.1. China has gone from 6 to under 2. Anything under 2.1, your population is going to crash. United States, we're above probably because of immigration. Well, we're not really above. We're kind of just below it right here. The world is slightly above. Germany is down, Japan is down. Anyway. So this was in August, global M&A hit 2.6 trillion year to date, boosted by AI and quest for growth. Some of their discussion of AI is actually in the investment banking offices. AI and regulatory changes boost corporate growth motivations. Global deal making has reached 2.6 trillion. Damn. The highest for the first 7 months of the year. Oh, I got to take that comment down because I can't read it. Surge in AI and strategic expansion drives 2.6 trillion in MA activity. It's not all AI, but it's where the sweet spot is. Surge in AI and strategic expansion drives 2.6 trillion in M&A activity. Global mergers and acquisitions have reached 2.6 trillion so far this year. The strongest start since 2021, driven by a surge in artificial intelligence investments and corporate demand for growth despite Trump. While the number of deals is down 16% from last year, total deal value is up. One's a train. Although earlier concerns about Trump, executives are increasingly motivated by growth opportunities, particularly in AI and related sectors. JP Morgan and other firms expect the momentum to continue through the second half of the year as companies push forward with major strategic deals. Tech and electronics, especially AI-related infrastructure like data centers, have now overtaken healthcare as the leading M&A sector. It's not all AI, but it's the driving thing. Yes, Wall Street is actively raising funds and investing heavily in artificial intelligence. This reflects the widespread belief that AI will drive significant economic growth and reshape various industries. Large-scale financing rounds. Companies are raising billions for AI infrastructure and development, attracting significant backing from major financial institutions. For example, Meta Platforms secured $29 billion debt package led by PIMCO and Blue Owl. Venture capital funding. AI startups are receiving a dominant share of venture capital funding, indicating a strong investor appetite for early stage AI innovation. Notably, nearly half of U.S. venture capital funding went to AI related companies, nearly half last year. Increased capital expenditures. Big tech giants like Microsoft, Amazon, and Meta Platforms are making massive capital investments in building and operating data centers to support their AI endeavors. Hedge funds are increasingly incorporating AI into their strategies for various functions, including data analysis, quantitative trading, risk management, and portfolio optimization. AI-focused investment vehicles. AI-focused investment vehicles. Investment firms are launching funds and vehicles specifically geared toward AI investment, such as AI ETFs. That's coming after Labor Day, guys and gals. AI-focused investment vehicles. Investment firms are launching funds and vehicles specifically geared toward AI investment, such as AI ETFs. Developing and adopting internal AI tools. That's where the banks are using it as well. They talk about their skepticism that there might be a bubble. This is Wall Street Journal. I don't subscribe, but this is what I could show you. AI is Wall Street's modern gold rush. Here are how investors are placing their bets. Data centers. Artificial intelligence evangelists such as Sam Altman want to reshape the world, but they need mountains of money to do it. This is sparking a modern day gold rush on Wall Street. Tech and power companies are raising cash every which way, issuing shares, loans, and bonds on publicly traded markets and in private deals. Large firms or hyperscalers such as Amazon and Microsoft could easily spend, look at this right here, $3 trillion by 2030 to build and operate data centers for their businesses, according to BlackRock Investment Institute. The trick for financiers is avoiding the losers in a new industry that can turn treacherous on a dime. Well, that's fair enough. As it did last week when Chinese upstart DeepSeek triggered a sell-off. So this was written 2 or 3 months ago. The recent frenzy echoes previous bonanzas such as fiber optic cable, which boomed in the 1990s, busted and then ultimately paid out, fracking for oil and gas. Blue Owl likes Blue Airline. Global AI spending is projected to reach $632 billion. This confirms Corey's number of $300 billion. Global AI spending is projected to reach 632 billion by 2028, with strong growth in generative AI applications. This spending will be driven by investments in AI software, hardware, and services, with software accounting for more than half of the total market. This confirms Corey's number of 300 billion. Overall AI spending of 632 billion by 2028. Generative AI growth. Gen AI is experiencing rapid growth with a projected 5-year CAGR of 59%. Software dominance. AI software will represent the largest category of spending. AI software will represent the largest category of spending. AI software will represent the largest category of spending, with AI-enabled applications and AI platforms receiving the majority of investments. Infrastructure spending, significant area of investment. Regional focus, the Americas, that includes Canada, by the way. Canada is part of the Americas. And Asia Pacific regions are seeing strong investment in AI infrastructure and customer service cases. Cloud spending. Cloud deployments are driving AI infrastructure spending. Detailed spending breakdown. Software, more than half of the total AI spending will be allocated to software, with AI-enabled applications and AI platforms being the primary recipients. Artificial intelligence worldwide. The market size in the artificial intelligence market is projected to reach 244 billion. We can use that number as a number to do a calculation. 244 billion US in 2025. The market size is expected to show an annual growth rate of compounded annual growth for the next 5 years of 26%, resulting in a market volume of US 1 trillion. This is AI intelligence, a market volume of US 1 trillion by the end of the decade. The largest market size will be the United States. Artificial intelligence market summary. The global artificial intelligence market size was valued at $279 billion in 2024 and is projected to reach US dollars 1.8 trillion by 2030, giving a CAGR of almost 40%. The continued research and innovation directed by tech giants are driving the adoption of advanced technologies in industry verticals. That's where Railtown is, such as automotive, healthcare, retail, finance, and manufacturing. Key trends. the North American AI market accounted for a revenue share of almost 30% last year. The artificial intelligence industry in the United States is expected to exhibit a significant CAGR over the next forecast period. Based on software solutions led the market and accounted for 35% of global revenue last year. Based on function, the operations segment accounted for around largest revenue last year. I don't know. All right, so the market size last year was 279 billion. The 2030 projected market size is 1.8 trillion. North America is the largest market. Asia is the fastest growing. Tech giants like Amazon, Google, Apple, Facebook, IBM, and Microsoft are investing significantly in research and development of AI, thus increasing the artificial intelligence market cap. These companies are working to make AI more accessible for enterprise use cases. Software solutions and led the market. Software solutions led the market and accounted for 35% of global revenue last year. It's hard on my eyes to read those. Ward Richardson, I did not see that, William. Wow. Just goes on, and that's mind-blowing. Yeah, I just did these revenue cases, and I think came up with pretty conservative range. It's a big range. I'm talking 18 months, 2 years, 2.5 years, 3 years. But it could happen very quickly, too. But that's just Railtown. That's not even AI partners. It's not even AI partners. Just Google deep search. I know, but every time I wrote in the search, they were giving me a whole the world of networks. They weren't giving me AI Partnership Corp. I have to come up with a better question. Hey, Red Pepper Ronnie, how are you? Good to see you, and good to see you, Sonawat. So I'll just do one last revenue calculation using that, what I just read to you. Last year, the market was 244 billion for software solutions, 244 billion. I think it was last year. Might have been this year, but I think it was last year. Let's just assume Railtown gets 1% of that, not 3%. It's a big number. Two, four, four. That's just impossible. It's just impossible. That means Railtown would have revenue of 2.4 billion. That's almost ridiculous, isn't it? All right, so let me see. Now that was 200. I did 244 billion, yeah. Times 1%, 2.4 billion. That's just silly. Let's take 10% of that. 244 million. All right, I can deal with that. So we're going to say they will capture 0.1% of the market. 0.001. 0.001 would mean that Railtown would have a $244 million revenue. I'm not saying they'll do this right away. Like I say, could take 2 or 3 years. But this is the market that's already happened. They just got 1/10 of it, 1/10 of 1%, 1/10 of 1%. They got 244 million in revenue. And if you use 25x as the valuation multiple, that gives a valuation of $6 billion for Railtown. And let's use 170 million shares. That gives a target. That gives a target of $35 a share. So this is the market. I just showed it to you. I just wrote down 244 billion. I just showed it to you. If Railtown got 1/10 of a percent of it, just 1/10 of a percent, they would do 244 million a year times 25x, 6 billion, $35 a share, with 170 million shares outstanding. Guys, the stock, I don't know if that's a valid calculation, but do you notice every calculation I make, everyone is a big number per share? And I'm not I'm not coming up with these market sizes. I'm taking it out of the press, out of presentations, off of their website, out of research. So if someone a lot smarter than I am came up with $35, what would they discount it to today? Once it can start trading, I don't know. If we just take 25% of that, it's a $9 stock right now. Well, I'm not saying that would happen in the day they announce the deal, but maybe in September it goes to $9. There's a lot. It's big numbers here. Big numbers. All right, so it's 10:30. I think I'm going to sign off because I'm tired. So anyway, thank you, everybody. The reason I came on was to try to talk about valuations in the broadest sense, and try to do it conservatively. But you see, the numbers are big, and my argument to you, theoretically, is treat Railtown not as hot money, but as money you're holding for 18 months, maybe longer. And these numbers become really achievable. The risks are the overall stock market. And of course, the risk is this excitement in AI, can it get bigger or does it pull back? We won't know. I would argue that it's here for the rest of the year, at least. So I'm tired. I'm going to sign off. Peace to each of you, and peace around the world.